to bring on board Amitabh Chaudhry to talk about their recent Citi business acquisition, the rationale, the roadmap, how exactly things would come on stream for Axis Bank shareholders. Mr. Chaudhry, good morning. Thank you for joining us. This deal was in the works. Now it's official. We can really talk about it. If I look at the history of Axis Bank, Mr. Chaudhry, first they acquired the security business of Enam Securities. Then under your leadership, it was Max Financials insurance business, and now the Citi business. Let's understand that why is Axis Bank acquiring so many assets?
Well, if you start with the first one, Enam Financials, if you look at where we are today after post-acquisition, Axis Capital, as it has been renamed as, is the primary and the number one player in the equity capital markets in the country. They have an expanding business on the brokerage side. We are becoming a meaningful player on the M&A side. So in our One Axis strategy, it fits in extremely well. And as India is also becoming one of the globally startup players across the world, and as more and more companies are coming in, I think we can continue to play a very important role and continue to benefit from this One Axis strategy. So that acquisition has worked out, undoubtedly so. As far as Max was concerned, it just made a lot of sense for us that we were distributing Max products for more than 10 years. There was an opportunity to sign up a long-term deal with them in terms of distribution, and we could potentially get an equity stake at a much lower price. So it just made so much evident sense. And obviously, it strengthened our partnership with Max. We really like the company, like the management team. I think the promoter has done a great job in terms of creating this enterprise, and so that also fitted in very well with our strategy in terms of taking meaningful stakes in companies with whom we have long-term partnerships. As far as this particular acquisition is concerned, the portfolios which are acquiring from Citibank are a strategic fit in our GPS journey towards granularizing our retail business and premiumizing it. It further consolidates our position as one of the leading banking franchises in India. As I've been saying, a transaction of this nature comes once in your lifetime. Citibank has been running this business for 120 years. They are the premium consumer banking franchise. Yes, not such a growing one, but the kind of customers they have are perhaps the most premium customers in the country. When you get an opportunity like this, it obviously makes sense that at a certain price you do bid for it. I think Citi found us to be the best choice for this particular business, and we are delighted. This acquisition will create opportunities and synergies that will catapult us on a much faster trajectory. It's not that we're not going on our own, but it just, further accelerates our journey towards creating a Enviable franchise across the country. So it will bring tremendous value for all the stakeholders. It will provide access to one of the best affluent consumer franchises in India. It will also bring to the consumers of the Citibank franchise the power of One Axis. We are present across the breadth and depth of the country. We have products which go much deeper, much wider than what Citibank has been able to offer. And yes, if you cut through the portfolio of businesses we are acquiring, it includes a quality credit card portfolio, an affluent wealth management clientele, meaningful deposits with 81% of it being CASA, and other consumer lending portfolio. It has been known in the market for its Citi phone services. We will get salary account base of 1,600 plus corporates, which is the Suvidha corporates. There are a lot of very interesting parts, and each of them kind of adds to strengthens our franchise. So from that perspective, this acquisition made sense. We believe we have paid the right price for it. We believe we have structured a transaction where we have protected our downside to ensure that if there is a customer attrition beyond a point, we are protected. But the reason we have done this deal, and we believe we will be successful, is because we are getting a great set of customers. We're getting a great set of people, 3,600 employees who we really value. And obviously, we have the other parts of the business which make a lot of sense for us.
Asset like this, like you said, comes on the block once in a lifetime. So was there a bidding war? Because we understand that there were other suitors also. The question which has been asked is that did Axis Bank overpay to acquire this real once in a lifetime asset?
So this transaction was initiated by Citibank sometime in June of last year. I'm sure other bidders were there in the process. Whether we have paid or overpaid or underpaid, I think the market has responded in a particular way. A lot of analysis is being done by various people. in terms of what we have paid. I think the general response is that it has come at a decent price. I do not know if someone else was there, what prices they bid at, why they were not selected, etc., etc. It's just pure speculation. We believe there was a price which we got our approval from our board for. We stuck to that price. And I think obviously Citi liked the price to do the transaction with us. The transaction took slightly longer because I think it is a complex transaction. We are not buying a company. We are buying a portfolio of businesses. And so it took some time to wade through some of the complications that come with it. And it was very important that we bed down some of these complications upfront rather than discover them through the transition process. So I think both the parties have benefited from taking the time, thinking through the issues, and ensuring that we are on the same page in terms of how we'll respond to as and when these issues come up, because it's very clearly laid down in the agreements which you're signed with.
Okay, if I look at the assets which you've acquired, and I'm quoting brokerage reports here, the ROA is at 1.6, which is not very far away from the normalized ROA of 1.4 to 1.5, which means that the deal will take, if not 3, minimum 2 years before the real benefit kicks in.
So yes, if you look at our primary focus here is, as you rightly pointed out, that we need to ensure that for the customers of Citibank, it is extremely seamless. We don't want to hurry this through. So first is, we believe it will take about 9 to 12 months to get all the regulatory approvals, to get dispensation from the regulator in some of the certain areas. We also need to get customer consent, and there are various ways of getting that customer consent depending on what kind of agreement they have with Citibank. It will take that much time. And then there is what we call the LD1 date, when the portfolio will get transferred to us and the price consideration will be paid. From there on, because Citibank is working off its own technology platform, it will take another, we believe, 18 months to transition every Citi customer onto our platform. Why are we taking so much time? Because we want to be careful. We don't want to do it in a hurry. We want to transition it slowly, gradually, so that the experience of the customer does not change. And obviously, technology transitions do take time. But Axis Bank will be servicing those customers from the LD1 date, which is about 9 months away. Our agreement with Citi and our understanding with Citi is to ensure that these customers do not face any problem whatsoever. And over and above that, they get these additional products, additional benefits, which Axis Bank products can provide to them. So it will take a little bit of time, as we have kind of pointed out in our analyst call and as we have shared with the media. But it is the right thing to do. In our desire to get this very quickly, we don't want to spoil the customer experience. We want to ensure that each and every customer of Citibank stays with Axis and expands their relationship with Axis as we move forward. And same applies to employees of Citibank.
Is this a conscious strategy which Axis Bank is adopting now? Because you had a legacy issue in terms of the corporate book exposure. It was the last decade was almost like a nightmarish kind of a decade, because the industry went through a painful grinding slowdown, and that really impacted your corporate book. So is this like a conscious strategy that you want to diversify and do not want to repeat the challenges of the past?
I mean, we have not acquired this because we want to move away from wholesale. I think we believe that we will be one of the primary wholesale banks in the country going forward. Right now, the wholesale bank side is a little bit muted because of the credit growth is muted. Secondly, the pricing on the wholesale banking side is also quite fine. And we just want to be careful about just giving our balance sheet out at prices where the NIMs don't make any sense to us. But it will, over a period of time. There's a lot of other work which we do on the wholesale banking side. And I'm very confident that as the Indian economy expands, the wholesale side will also expand. The reason why this deal makes sense for us is obviously it fits in very well, as I said, with our granularization and premiumization part of the GPS strategy. We have grown organically all these years on the retail side, and we have done exceedingly well, but our aspirations are bigger. And this deal gives us that strategic thrust to close the gap with peers and improve the quality of our franchise across many parameters meaningfully. Our market ranking moves up. Our quality of customers moves up. Our premiumization moves up. Our profitability also moves up. It is ROE accretive. It is NIM accretive. It is LCR. It speaks to LCR very well. So and then we get this quality set of people which Citibank has obviously hired and nurtured over a period of time. And finally, they have these global processes and systems which you can learn from. So in every which way, it adds to what Axis Bank has to offer to its customers. Obviously, it comes at a price. We believe the price that we are paying is more than fair. and it will allow us to just, accelerate our journey into becoming a premium, banking enterprise in the country.
So if there is a 20 to 30% customer attrition, that is something which you've already penciling in terms of your projections and growth?
So when we bid for this deal, we had done a survey using some external agencies in terms of what Citibank customers, how will Citibank customers react to the change of guard, when Citibank sells out? How will they react to different brands? And obviously, one of the important things we're checking is how will they react to a brand like Axis. It has given us some real insights in what kind of attrition we can see. We have given some real insights in terms of what concerns the customers might have, etc., etc. Obviously, when we look at a survey like this, we do take into account the possible attrition of customers. If not possible attrition of customers, the possible attrition of business. We also take into account the possible attrition of staff. But that's how you price for the deal. But our intention and our whole energy will be focused on ensuring that no one leaves us, either the customers or the staff. Yes, we are in a very competitive market. We expect competition. We expect competition to try to wean away customers and staff. We fully understand and appreciate that, but we're not going to let go of either the customers or the staff that easily. And the work starts from yesterday, actually.
Good to hear that. Okay. Now this acquisition will hit your CET by about 230 bips, which means to reach that comfort zone, you will have to raise capital. Will it be a good idea to raise capital at a time where in general we know that the credit growth has not picked up and ROAs are not the best? So here it could be a situation where you will be forced to raise capital at a time when the corporate spreads are not the highest or the best.
So, it's a fair question. Our strong balance sheet provides us the flexibility to fund Citi India's consumer purchase through on-balance sheet liquidity, external capital, or combination of both. As you rightly pointed out, the impact is about 230 basis points. While the resultant CET1 ratio will remain comfortably over a regulatory requirement at 13% or higher, we may consider raising equity capital in the future at an appropriate time to restore all or part of the CET1 consumption. Please understand that our balance sheet allows us that flexibility. And we intend to use that flexibility over the next, let's call it 9 months to 3 years to decide when is the best time to raise capital. Let's also not forget that given the growth which we are recording anyway as Axis Bank, we would need capital on a regular basis. This transaction will require us to raise capital maybe slightly earlier than what we had anticipated. Also, let's not forget that the price consideration, the payment of that price consideration is about somewhere between 9 to 12 months away. So yes, we have enough time, we have enough flexibility, and we will obviously take the right call at the right time, depending on how the market evolves. And it is an important consideration from both regulatory and shareholder perspective, which we'll obviously take into account.
My last but one question, if I look at the other mergers which have happened within the financial space, there are integration issues, cultural issues, pension liabilities. How will you manage and map all that?
So obviously a very important part of any merger of this size is how do you execute on that merger. Our integration management committee has already been formed. And yes, some of the important considerations in that integration plan would be around customer attrition, staff attrition, technology transition, and so on and so forth. And also getting benefits in terms of ensuring that we can cross-sell more to the Citibank customers. We can also reduce some of the costs which are there in that business. And when I say costs, I don't mean employees, I mean the just global cost which this business incurs because it is part of a global franchise. So as part of that integration plan, obviously we have thought through some of these issues. Now we'll dive deeper into those issues because the agreement is signed along with Citi and come up with a very detailed plan in terms of how do we manage this risk. We know some attrition will happen. Issue is how well we manage it and how much we restrict it and mitigate it and give comfort to the clients and the staff that frankly, they are better off working with us and being with us rather than going and seeking some other banks or some other people they want to work with. Our view is, given, and then I talked to you about the survey, our view is that we should be able to manage it exceedingly well. You mentioned the pension issue, and I know what you're referring to. We are buying a portfolio of businesses from an existing entity. We are not taking over a publicly listed enterprise. So as part of that, there are clear disclosures which Citibank has made to us. all those disclosures have been taken into account, but obviously there are parts to the agreement which indemnify us for some of the things which might not have been disclosed, might not have been covered, so on and so forth. And as I said, the deal has taken slightly longer than expected because I think both the parties sat down and tried to ensure as level of detail as possible so that some of these issues don't come up in the future. And if they do, and sometimes they do, we believe we have signed an agreement which mitigates that risk for Axis Bank in a very significant manner.
So can I say that the Axis One strategy now has really fit in very nicely? The capital market stroke security business, that's become big for you. The insurance business is on its way to become big. And now you've got the wealth business and the credit card business. So can I say that the full bouquet offering of Axis Bank is ready now and we should not expect any more acquisitions because you've got the complete area of services?
Yes, we are, with this acquisition, firstly, we'll have enough on our plate to execute on. So from that perspective, I do not anticipate any other acquisition happening in Axis Bank for some time. But as a management team and as, our board would say that you can never say no because some transaction might come along. It is sometimes important to look at them. But yes, in all likelihood, Axis Bank going and trying to seek another acquisition looks like a distant possibility at this time.
And I'm tempted to ask you one more question because you're building your businesses which you've acquired big now. So can I say that right now market should not speculate that any of your subsidiaries will go public very soon because you're still in the building process for the 3 businesses which you've acquired?
So Nikunj, when we had laid out our GPS strategy, we had said that we want to scale up our subsidiaries. Our 4 big subsidiaries have scaled up exceedingly well. Axis Finance is, in my mind, perhaps one of the best performing NBFCs with very high ROE, no NPLs. Axis Mutual Fund has continued to go from strength to strength. Axis Capital we discussed. Axis Securities also profitability has gone up many fold, 10-fold in comparison to what we had 2 years back. So in that sense, the subsidiaries are doing very well. Yes, we do believe that some scaling up requirements, some scaling up is required even further in the future. There are some limitations in terms of how much equity capital we can continue to infuse in some of the subs because of regulatory requirements. So depending on how well some of the subsidiaries do, we might be required to list one of them sometime in the future. That future we don't know at this point in time, but our focus right now is ensure that the subsidiaries continue to scale up, become top 5, then become top 3 in the area they operate in. Some of them are already there, some of them still need to get there. And I think finally that value will feed into Axis Bank. And obviously it feeds into our overall One Axis strategy in a very, very big way.
Well, Mr. Chaudhary, good luck. Have a wonderful day ahead. It's 1st of April, so have a wonderful financial year also ahead.
Thank you so much, Nikunj. Always a pleasure to talk to you.